Okay, gang, let's see what's going on in the market here. First of all, the market, and I'll put it up here first on my chart, on my MV2 color-coded chart. Okay, you can see what's happened here. We now have a consolidation here that was led by a nice, we had a very tight cluster. Okay, very nice cluster. See how tight it was here? Very nice. Okay, you get that nice cluster. That means the consensus was good, that everybody felt, hey, the economy was good, things are good, we're going to buy stocks. And then we had a consolidation. Okay, and consolidations make your stock powerful. Okay, it does. Although, okay, at the same time, it tells you it gives you other information that the internals in your stock market, okay, SPY, also can be breaking down. Now, you know that by just looking at my earnings growth. If my earnings growth and my GDP are negative, which they are, that means your internals are breaking down. So no, you can't have a PE ratio. You can't support PE ratios, high PE ratios, if your earnings report for every quarter is negative, like it's been, or your GDP is just bad, below 3%. So that, if they are, then it means that there's internal problems. If they're not, if you got good GDP, you got a good earnings growth, and you got good financials, then it just means it's taking a rest, and it's just like, just getting more powerful, and she'll break out again. But when you get a situation like this one right here, okay, that is very clear. Here's another consolidation right here, now led by a nice consensus, right? See, when you have these consensus, this is when you really put the foot to the metal and buy stock right there, okay, on a chart right there when it's green. See, when it's green. And so, but this one, everything is getting bad. Our earnings growth are bad. Our earnings growth are negative. Our GDP is terrible, pathetic. All the numbers that are coming in, our ISM numbers are terrible. Our durable good numbers are terrible. Autos are starting to fall apart. I mean, she's in a big jam on B. She doesn't know what to do because she can't lower rates anymore. So this means that we should get a very big, very big sell-off right here, like that. Huge sell-off. Okay, big sell-off. We're talking probably 50, 60% of the market's going to go away. At least that when it happens. That's why I encourage you to get this color-coded chart that tells you when it's green and when it's red. Red means the institutions are leaving. Green means they're coming in. And when you finally get that final big red coming in here, that means, hey, you better start selling, and you sell shorts to make some money on the way down. Nobody should be sitting at a market and the next crash losing money. That is insane. Nobody should be losing money. We've had 3 markets. We have three of these crashes now, right? We had the tech bubble, and then it broke. And then we had the housing bubble, and then it broke. And now we've had the stock market QE bubble, which it should have stopped right here, turned, and started to break. But they kept it going. They kept it going with QE1, QE2, QE3, kept it going with stock buyback. So it's up here, which is absolutely nuts, which means you have a PE ratio up here. PE ratios forward, back, current between, let's say, 19, okay, 19 and 24. That is insane. You can't support, okay, you can't support a PE ratio of that kind with the earnings we have. So the earnings are all negative. There is nothing to support this market, okay? Nothing. This market is going to fall, I mean, big time, okay? Right here, just going to turn, and she's just not going to stop. And it probably will stop here for a little bit, but it's going to come all the way back down to where this thing started in 2008, right down here. You can bet on it, all right? You can bet on it. How do we know that? Well, because from the last 2, every crash, okay, it always starts with the same problem. The market has been too much money, too cheap money. They print too much money. It's all stimulus money. They print and print and print, and they think that they can just put stimulus money in like they did with the dot-coms, kept funding all the pension funds, all the hedge funds, all the hedge funds, all the speculators with nearly free money, and then when they get to a point that there was no more buyers left, okay, of dot-com, and when that happens, then you get a deceleration, and that means pricing starts to drop. Okay, you can't get the price for your goods anymore, so people put their goods on sale, and then what they do is they start laying people off, and then it just like a big snowstorm, and she just keeps going, and then she crashes. Same thing here. We had everybody, the housing was the same thing, was all easy money. Everything was easy money, okay? And you know all that. And then what happened? Finally, up here, nobody was buying houses anymore. They weren't making their mortgage payments anymore. House prices started to accelerate. People started to get laid off, and there you go again. Now this one, okay, the problem we have here, all of this, okay, from 2012 here, all the way up here, okay, was $7 billion, okay, more than that actually, $7 billion in all stock buybacks to push these stock prices up, okay. All they did is push the stock prices up by buying their own shares back. The biggest problem with buying their own shares back, to artificially push up the earnings, okay, to push up the stock price, it's all fake. It can't hold. Everything's fake. So so at some point when this one breaks, because it's so high, because this was all stock buybacks, okay, all stock buybacks. So that's all quicksand. So this thing's going to break so fast, it's incredible. Now, how are we going to know when it's going to break? Just like we know here. But on our color-coded chart, we'll see. We'll see this will turn red like this, and then when it takes out this guy right here, and then it takes out this last support right in here, this area right here, takes this last support out right in here, there is no bids. This thing will just careen, just go straight down. There is no possibility, very little possibility for this market to go up. The only way it can go up and stop coming down if they do another QE. If for some reason we get a 5% pullback, 10% pullback between now and the election, they're going to come in with QE and push it up. If they don't, we get through the election, and right after the election, this market's going to give. There is no earnings growth. There is no economic growth. The banks are falling apart. Okay, look at the banks. Here, I'll put up the banks for you right here. Okay, XLF. The banks are falling apart right here. Okay. Just falling apart. You need your banks to hold up the stock market, and it can't do it. So right now, our plan is the auto industry is going to collapse. Okay, the defaults, just like what happened with mortgages, subprime auto loans are going to collapse. So we're focusing on banks, okay, that carry a lot of paper. So what you should do is join the gang. Get your color-coded chart. It's going to help you a lot, either with an individual stock or the market itself. It tells you when they're pulling their money out, and you know not to buy, okay? You know not to buy, but better yet, you know when to sell short. Okay, hope you enjoyed this, and I will see you on the charts.